Meet Supermicrocomputer Incorporated, SMCI, not exactly a household tech name, but a rising star in the data center world. This company builds high-performance servers, think the powerful computers that run AI models and cloud services, using chips from the likes of NVIDIA and AMD. In 2023, SMCI rode the AI boom like a surfer on a big wave. It was one of the biggest beneficiaries of the surge in generative AI data center spending. Its stock skyrocketed as investors cheered its growth. But every great story has a plot twist, and for SMCI the twist came with a revised outlook for fiscal 2025 that has investors doing a double take. SMCI just told Wall Street, "We might not hit those sky-high numbers we talked about earlier." The company slashed its revenue forecast for FY 2025, a move that has serious implications. SMCI lowers FY 2025 revenue outlook, rain check, on the big numbers. The big news: SMCI now expects its fiscal year 2025 revenue to come in between $21.8 billion and $22.6 billion. If that sounds like a lot of money, it is, but here's the kicker: it's a downgrade from what the company had projected before. Originally, SMCI had forecasted FY 2025 revenues in the ballpark of $23.5 billion to $25.0 billion. In other words, they essentially told investors, "Remember that sunny $25 billion forecast? We're revising it down to about $22 billion, cloudy with a chance of slowdown." From a broader perspective, SMCI's lowered outlook suggests that even a hot tech company isn't immune to macroeconomic pressures. High interest rates, geopolitical tensions, tariffs were specifically mentioned, and companies tightening their IT budgets can all weigh on spending for big-ticket equipment. Enterprise customers, like data centers and cloud providers, might be saying, "Let's hold off on that multi-million-dollar server order until we're sure the coast is clear." This is a stark change from last year's euphoric environment, where everyone was racing to deploy AI infrastructure. The implication is that FY 2025 is not going to be the carefree joyride that some had hoped. Instead, it could be a trek through muddier terrain. To visualize the magnitude of this revision, consider a simple comparison of the numbers, from a potential $25 billion down to $22 billion. That's a multi-billion-dollar haircut to the forecast. More than just trimming split ends, it's like cutting off a man-bun of revenue. In short, SMCI's management basically told investors, "We're still growing, just not as fast as we thought. Blame the economy and those pesky tariffs, but stay tuned. We think it's a short-term drizzle, not a long-term downpour." Wall Street's expectations versus reality. Consensus gets a wake-up call. Now, here's where Wall Street's jaw hit the floor. Analysts had collectively expected SMCI to rake in around $23.5 billion in FY 2025. This consensus was built on the previous optimism, and perhaps a dose of AI hype. SMCI's new guidance of $22 billion is well below that $23.5 billion consensus, essentially signaling to analysts, "Hey, your forecast was a bit too sunny. We're looking at cloudier skies ahead." By the way, if you are benefiting from the content so far and want more like this, like the video, it means much to me, or hit the subscribe button and comment the word "more." Just go ahead and type the word "more" so I know. Now that you have commented, let's continue. When a company's guidance falls short of the consensus by such a margin, it signals a tougher road ahead. It's like a sports team telling fans before the season, "We know you expected us to win 12 games, but realistically we might only win 9 or 10. Investors hear that and know the season might be more of a grind. In SMCI's case, the message is that macroeconomic pressures are weighing on enterprise spending. The big corporate clients are more cautious with their budgets. Higher interest rates and economic uncertainty worldwide have made businesses think twice about splurging on new IT hardware. Imagine a CFO at a cloud computing firm looking at the economic tea leaves and saying, "Maybe we don't need to upgrade all our servers this quarter. Let's stretch the old ones a bit longer." Multiply that sentiment across many clients, and you see why SMCI's sales might not hit earlier lofty heights. One clear indicator of these headwinds: tariffs and geopolitical issues. SMCI itself pointed out that tariffs, likely referencing US-China trade tensions impacting tech components costs or customer demand, are a concern. Economic uncertainty, whether it's worries about a potential recession, global conflicts, or just tighter corporate budgets, acts like a weight on SMCI's previously rapid growth trajectory. For investors, a consensus miss like this often triggers a reality check. No surprise, SMCI's stock took a hit on the news. Shares fell about 5% in after-hours trading when this outlook was announced. Wall Street hates unpleasant surprises, and this was the equivalent of expecting a home run but getting a base hit. It doesn't mean SMCI is out of the game, but the market had to quickly adjust to a new, more modest growth outlook. Q4 2025 guidance, short-term pain in the forecast. Let's zoom into the near term. SMCI's expected revenue for Q4 FY 2025, the quarter ending June 30, 2025, is now guided at $5.6 billion to $6.4 billion. For most companies, $6 billion in a quarter would be stellar, but context is key. Analysts had been expecting about $6.81 billion for that quarter. Even at the high end of SMCI's guidance, $6.4 billion, the company would miss the mark relative to expectations. At the midpoint, $6.0 billion, they're roughly $800 million short of the consensus. That's like planning a huge event and 10% of the guests don't show up. Breaking down what this means. Q4 is typically a crucial quarter for tech companies, and for SMCI it was supposed to be a blockbuster, fueled by all those AI server sales. Instead, the company is warning it might only be a moderate success rather than a record-smashing quarter. This revised Q4 outlook tells us a few things. Growth is slowing, at least temporarily. To put it in perspective, even $6.0 billion in Q4 would still be huge year-over-year growth. SMCI's Q4 last year was much smaller, given Q3 FY 2025 was $4.6 billion versus $3.85 billion in Q3 FY 2024, we can infer Q4 YY growth could still be strong. But it's slower than what was baked into the stock price. The deceleration is what's worrying investors. It's as if SMCI hit turbo boost in 2024, and now in mid-2025 it has to downshift a gear. Deals are delayed, not dead. The company noted that some customers postponed their orders from Q3 to Q4 or even next fiscal Q1. If those deals didn't close in Q3 as expected, one might hope they'd close in Q4, giving Q4 a boost. The fact that Q4 guidance is still below prior expectations implies either not all delayed deals are coming through immediately, or new orders are softer than anticipated. It's like a team saying, "We didn't score in the third quarter, and we might not fully catch up in the fourth either." Investors will have to watch if those sales land in the September quarter, Q1 FY 2026, as management suggests. Otherwise, there could be more disappointment. Margins and earnings will be hit too. Side note, SMCI guided Q4 earnings per share of 40 to 50 cents, versus analysts' 64 cents, indicating profit is taking a hit alongside revenue. Lower revenue growth plus likely some pricing or cost pressures means slimmer margins. So it's a short-term pinch on both top line and bottom line. For a company that was printing strong profits during the height of the AI server boom, this slowdown is a reality check that competition, like Dell, as one analyst hinted, and cost issues are creeping in. In plain English, SMCI's Q4 outlook basically says, "We're not going to finish this fiscal year with a bang like you thought. It'll be more of a modest finish, good, but not legendary." It's the difference between an A+ report card and a B, still decent, but if Wall Street, expected an A+, you're going to have a conversation about what happened. Whenever a company hits a speed bump, analysts start updating their models and price targets. So where do the experts see SMCI's stock heading over the next year? According to data from 12 analysts, the average 12-month price target for SMCI is $44.93. But that's just the middle of a pretty wide range of opinions. The highest price target among those analysts is $73, and the lowest is a mere $15. That spread is jaw-dropping. Fear God, and give glory to Him, for the hour of His judgment is come, and worship Him that made heaven, and earth, and the sea, and the fountains of waters. Revelation 14 verse 7. I appeal to you to fear God and obey His law, for His commandments are sure and His word everlasting. Do not be afraid, do not be discouraged. Want more information? Please check the description section. That's the end for now. If you have watched until the end, drop a comment like this: I stayed until the end. Just comment that I stayed until the end. When I see this comment, I will give you a heart. 3 more favors I request from you. First, like this video, subscribe, and then turn on the notifications bell. If you do this, you greatly encourage me to continue bringing to you insightful information. Do not miss out on our future videos full of insight. All I am asking is your subscription. Thanks for joining us today. Your support means so much to us. Do not hesitate to share this video to help someone who may benefit. I recommend that you watch the next video, subscribe to the channel, and share your thoughts about today's video. Wish you God's blessings and care. Wait, watch, and pray. See you in the next video according to God's will.